Hi everybody, this is Bleeding of Insanity Industries, and today I've got the full-on space version of the update of the trading the continuation pattern video from last week. Now it's the same trade sequence as last week. All I'm doing is being more dynamic with space, and you're going to be able to see it on the screen. My money is in the red box and held profit is in the green box, and we're just going to position ourselves very conservatively. We're going to protect ourselves with many lines of pivots. You can see those on the screen now, and as time goes by we'll move our position up, keeping it behind plenty of nice pivot lines of protection, and we're just going to run the simulation through, and we're going to see where we end up relative to last week. Again, I'm always very conservative with these things. I don't want to show excessive profits. It's not helpful to do so. You just get the knee-jerk, that's bullshit, or whatever. You can't do that in reality, or whatever. I really want to be conservative. I don't want to show big numbers. And so there are many more lines of protection between my money and price than there would normally be, except really at the beginning, where because it's all of my money on the line, I want to be very conservative and defensive. When there's plenty more green box there, I'd normally be a lot more aggressive. That's how I go. You'd have to do this by plenty of markups and so forth on your own, but from here we'll now get stuck into this video. So here we coming into the first trade now, and we're going to see a big red box with its point of maximum loss behind that bottom pink line. You can see why that pink line is there, I'm sure. Coming in, here's the rejection we were waiting for, and bang. And of course we don't need that 15-minute chart. We saw that in the other video. You can go back and look at that to see that happening if you want. These are exactly the same trades. You can compare the videos and complain about it later if you like. So here we come. There was the first trade closed out, and the new trade. And you can see now that our money here is protected behind the entire channel just below price. It has to cross 2 pivots to get into our money. That's not terribly likely to happen. That's what pivots are good for, is limiting how far price can go on you. And we're coming through this long section where we had lots of not much happening. And we're going to pop out the top, and you can see our lot size up to 45 micro, starting at 31, which is slightly larger than last time. Next trade in at 61 micro. That comes up, tags off, waiting for the next entry. And you can see that my space is getting safer and safer, further and further away from price, in terms of the number of pivots it has to cross and the amount of money in the way. There's lots more other people's money in the total amount of space than there was before. And we're about to kick off again, going up. There we go. Look at that. My money is now a tiny portion of it, and there we go. And we're coming through, and this is the fail at the end. So we're coming to the end of this. Is this the fail at the end? I hope this is the fail at the end. How are we going? Waiting for the trade to pick up. Yeah, I think this is the final fail. We pick up a pretty good price. And look, I'm keeping this position behind, what we've got 3-4 pivot lines between my point of maximum loss and price, 3 pivot lines between my money and price. You know, price has got to work pretty hard to hurt me here. And it comes down and takes us out at the end, and there we go. So there we see with a final profit coming into this there of a little over $1,000, almost 1,100. We can see there that last time we got a profit of it was about 16%. This time it's on the order of 21 or 22%. So again, mental math. You know, don't curse me if I've got that wrong. So not a huge difference in terms of result. Well, you could say that it's, you know, what, a third more profitable doing it this way. And I wasn't aggressive. I got to keep that in mind. I wasn't ridiculous. I wasn't curve fitting. I wasn't trying to make this out to be the most that I could. I could do a video on that, and it would come out to be a very, very stupid number and would be utterly meaningless. So here we are at the end. Even after this fail, we're still sitting with our lot size about a third or three-quarters of the way to, sorry, about a third or 40%, sorry, on the way to a maximum lots. We're nowhere near going crazy. We've picked up 21, 22% account gain, very simply just by finessing our space to be more dynamic based on the actual lines of support and resistance, the pivot lines which are in there, which protect our money. And you can see from it how much money we've got in, how protected our money is in space. Hopefully this video has been a little more enlightening, and so good luck in the future. This has been Bruden of Insanity Industries, helping you make more money by sucking less.